Hello and welcome to the Fibonacci free video for Monday, February 5th. This is David, and tonight we're going to take a look at a warning sign here in the markets. It's not really Fibonacci focused, but it is a backdrop to everything that we're doing with Fibonacci, and that is the cumulative breadth divergence, this idea that we're pushing up to new all-time highs here in the S&P 500. Meanwhile, if we sit there and have a running total of the nicey breadth on any given day, right? So when we were declining hard through 2022, a lot of the days were down and most of them had negative breadth. So on those days, we'd subtract from a running total. But on days when we were up and breadth was positive, we would add to that total. If we take that line, that's the blue line here, and look at it, right? It's generally going to go in the direction of the markets. It heads to the downside when we're going down and to the upside when we're going up. But that level is well below where it was here back in late 2021 and also below where it was here in early 2022. And the reason we're so focused on this is that if you look back through history at technical signs that tend to accompany long-term tops, cumulative breadth divergence is one of the very few that you can see at almost every long-term top. Now, even with that observation, this is only a warning. Right? If we keep heading to the upside, and if we head to the upside with good breadth, then this could be dragged upwards such that our cumulative breadth line takes out these early 2022 highs and the late 2021 high and eliminate that divergence, give us indicator confirmation as opposed to divergence. But until then, it is, as I said, a strong warning, a warning that if we start to turn down, then that move to the downside has the potential to snowball. Now, when we get to the premium video here in a few minutes, we're going to spend a little bit of time talking about what some of those signs will be that we start to turn to the downside. And there we can pull in when we have a little bit more time to talk, sort of all of these technical tools, the Fibonacci, the Elliott wave, the voodoo lines. We have this major line still below us, this 4787 cash S&P voodoo tree line that would start to signal that we may have a larger degree turn, but we'll likely see smaller degree turns sooner. And so we're going to dig into this price action here from last week, right? And here today, right? We turned down from a high on Friday, saw some additional action to the downside today, ran into resistance at the voodoo snow line, and we'll walk through all of that voodoo roadmap action as well as everything else to try and get a handle on whether or what would be a sign that we're starting to see some selling that, along with the cumulative breadth divergences, would warn of a more significant problem. Until then, the trend is still up, so that makes this a tricky spot. But as I said, when we get to the premium video, we'll dig into all of that. I hope you found this useful, and I will see you at the next update. Hey, David here with Simpler Trading. Thanks for taking a few minutes to watch this video. I hope you found it useful. And if you did, please help us out. Click the like button. You can also add your comments below. We love to read those and respond to them. You can also click the bell icon. That will alert you whenever we have new and updated videos. And if you want to watch us trade in real time with our own money, you can visit simplertrading.com to learn how to sign up. Until I see you again, as always, good trading, and we'll see you at the next video.